geopolitics today are so confusing for a person who's say 22, 23 because they have not lived in an era where every decade would have like at least multiple wars. So that impacts everything around us and that impacts investing also. Like, so how does a young 25-year-old think about defensive positioning in such a scenario?
All I can tell the younger people is this: we've all seen it before. It's okay. The world has come out okay in the end. The world will forever come out okay. If you don't believe this, you should invest in fixed deposits. I don't think there are meaningful ways for me to say don't get distracted. You will get distracted forever. Just don't make decisions on distractions.
You see people stopping SIPs also during these tense times. How do people think of diversification?
People don't think about diversification. That's why people tell you what's the best stock to buy. They don't tell me 25 stocks to buy and I'll buy all of them. So we are naturally geared towards bet on one horse and then show off about how much you bet on that one horse. That's how we are. We are a combination of investment and entertainment. If I need money for 3 months and I have had a 4x gain in my portfolio because I'd invested in 2020 and I've got a mutual fund and I want to exit. In 3 months, my salary will come and cover it up. What should I do? The AI might say, listen, you know what, you got 14 mutual funds. I'll take this mutual fund. This is the most tax efficient to exit. What it doesn't consider is there is an outside the syllabus thing also, which is to say, don't sell anything.
Welcome to Bazaar and Beyond. आज हमारे साथ हैं दीपक शेनॉय, फाउंडर एंड CEO ऑफ कैपिटलमाइंड म्यूचुअल फंड। कैपिटलमाइंड PMS के थ्रू उन्होंने काफ़ी सालों तक इन्वेस्टर्स के लिए डेटा लेड प्रोसेस ड्रिवन इन्वेस्टिंग फ्रेमवर्क्स बिल्ड किए हैं और अब म्यूचुअल फंड स्पेस में भी वो यही डिसिप्लिन इन्वेस्टिंग अप्रोच को स्केल कर रहे हैं। इन दिस एपिसोड हम एसेट एलोकेशन और फैक्टर बेस्ड इन्वेस्टिंग को आज के मैक्रो एनवायरनमेंट के कॉन्टेक्स्ट में समझेंगे, जहां AI डिसरप्शन, ग्लोबल इन्फ्लेशन साइकिल्स, इंटरेस्ट रेट रीसेट्स और जियोपॉलिटिकल शिफ्ट्स मार्केट्स को कंटिन्यूसली रीशेप कर रहे हैं। Thank you, Deepak, for joining us. I wanted to start off with just one question that I have with respect to how asset allocation and factor investing will change, considering we have the advent of AI. And a lot of people are talking that there will be changes in how people plan portfolios, there are tools being built for wealth management, Anthropic keeps writing blogs, and everyone gets scared and they're scurrying for cover. So how do you think these traditional models that you have grown up and you have worked with, how do you think these will change? Or do you think they might not change? I mean, what's your thought?
So, firstly, Vivek, thank you for having me on a show. But, the interesting thing about AI is it seems to be this one-stop blame game for everything that is progress. I don't see essentially that AI is a threat. I think AI is an enabler for a lot of cases. But you see, asset allocation is a simple concept. It's like saying I can't put all my eggs in one basket. Essentially, I want to have multiple baskets. So when equity doesn't do well, something else does well. Typically, it used to be equity, debt as a kind of a unrelated. So debt doesn't fall at the same time that equity does, or debt doesn't go up at the same time that equity does. But it turns out that's not the case. There are times when equity and debt both go down in a crisis. And equity and debt also go up sometimes together. So what do you get as a third asset class? You might get a commodity. Each commodity is its own asset class, but precious metals like gold and silver thrive on risk. Whenever there's a high risk situation in the world, gold and silver tend to go up. Similarly, you might have base metals such as aluminium and copper and zinc and nickel. They are more of the format that allows you to participate when there's industrial capex going on, or when there's an expansion in one kind of industry, such as data centers for and EV for copper, or maybe aerospace for aluminium. All of these kind of lead into a commodity boom cycle, and there are lots of booms and busts in the commodity universe. So you want a handle on a few commodities that are not correlated with each other.
Got it.
Alongside you have equity, and alongside you have debt. Now, I must say we have an NFO going on, so therefore multi-asset allocation seems to be the call of the day for us. But I think in general, the idea of having a lot of assets that are uncorrelated means that At the time when other things are going down, you might have something that's holding up the fort. And that something that's holding up the fort is going to reduce your downside overall.
Got it.
So even if I had a 50-50 in two asset classes, and one asset class is down 30%, the other one is up 10%, then the way it works is that you're only down about 10% in total. Even though, let's say out of 100 you have 50 in one asset class, and it's down 30%, that's down to 35. The other one's up 10%. The 50 has gone to 55. 55 plus 35 is 90. So essentially your 100 became 90. That means you got a 10% downside at a time when one asset class is 10% up, the other one is 30% down.
Got it.
And yet you're only 10% down. So in that sense, you are in a lot better shape than you would be if you were only in one of these asset classes. So asset allocation is therefore required in general to keep your portfolios together. The problem really happens when you see individual asset classes. So you see your equity down 30% and your something else, commodities maybe up 10%. You might be tempted to say, let me take money out of equity and put it into debt. Because nobody's unifying this together and saying you're only down 10%, right? So you need to kind of think about it and say, well, I'm down 10%. But a multi-asset allocation fund kind of brings this together. However, how does all of this meet into the future? In the sense of, you've got a bunch of things that are happening. Will a multi-asset fund still? I think multi-asset funds would have worked in the 1600s and it will work now.
Okay.
Because it is just multiple uncorrelated assets. And over a period of time, you get used to not getting great returns like equity does. But you also get used to not getting really lousy returns that equity does.
Okay.
Same thing with commodities. Commodities, everything's up right now. But it could be that in 2 years, everything goes down. And then you get, hammered out of the game. So you want something that kind of combines them all together and shows a single thing. In the time of AI, what changes? I mean, if you think about it, you might say, yeah, well, you know what? There are people who are doing asset allocation on the fly because AI is helping them. They go to the AI and say, I want an asset allocation model, and it tells you something and you do it. Now the issue is, fine, it's told you something today, and now what happens tomorrow? There's a war. What do you do now? It'll tell you, well, you know what, you should shift to maybe some defense stocks and maybe something else and something else. The minute you do that, you incur some taxes.
Correct.
Second, on top of these taxes, now you have to figure out how you've done in the new investment role and whether that was a decent decision to take in the first place. Because it's possible that if you hadn't taken that decision, you would have still done better. So now you have two decisions to track in that sense. If I had listened to the AI, if I had not listened to the AI, right?
Correct. And
this would be whether it's an AI or it's a advisor or a fund manager. But beyond some point, you don't want to make all these decisions and take all these, analysis yourself. You want the AI can do this for you.
Okay.
But the AI will do the analysis and tell you, if you hadn't changed, you would have been better off. Now, if it's a human being, you can go and say, boss, you only told me to do this. Then how is it? But you can't tell the AI because the AI is just going to say, oops, I'm sorry I did that. No, you don't have a human being to kind of incite the sense of, oh, I did something wrong and, or that, don't worry, there's an explanation for this. The AI is going to only be meaningful to that extent in the sense of that. So what you should do is let your fund managers use the AI because because you're not going to blame AI for the fund. You can blame the fund manager.
Correct.
Right. So you get one person to blame, but that person is also using AI. So AI is going to make your life better no matter what, whether it is this or that. But it may help make more data-oriented assumptions or choices on what they will invest in and whether they'll get out of commodities now and get into something else later. But at some point, I think we've got to restructure our thought process to say it's an enabler, it's a helper. It is not a replacer easily. Because in times of crisis, you will want a human being.
Correct. And if it is constantly just gets data fed into it, the model will keep changing dynamically. And at some point, you want a snapshot. You don't want a changing model. Also.
Well, I don't know. A changing model is actually a good thing because it just reflects how data itself changes. But it shouldn't always go like, I am telling you to invest in this. And then 3 months later, why did you invest in that? It's a stupid investment. Like, you only told me. Yeah, but now I have more data. And I'm telling you this is a stupid investment. No, you take ownership and say exit it, and then tell me what else to invest in, accounting for the fact that you've lost me money during this time, right? I don't think AI is ready to handle that part yet. But at some level, it'll ease up. It will say, listen, you got to make your decisions. I'm just going to give you inputs.
Got it.
And if you make the wrong decisions, I will still call you out on it.
Got it.
So even though I had advised it.
Got it.
But you took the decision to listen to me. Maybe the bad decision was to listen to me. But in the end, my data is only going to keep on telling me that something was right, something was wrong. And if there is a mistake, it's better that a third person tells you, because it's very difficult to admit that you have made a mistake yourself. So even if you're conversing with AI about your portfolio, it's possible that they cause you to A, panic and make bad allocation decisions. That's a different problem altogether. But B, to make you aware of the mistakes that you've done, so that you can either appropriately correct them or say that I'll live with them. I understand these may sound like mistakes today, but I'm okay with dealing with them in the future. But when you're aware that these decisions have been made and they were not exactly correct, I think the next phase of action would be much easier for you to handle. I mean, AI hasn't got into this. I'll give you an example. If I need money for 3 months and I have had a 4x gain in my portfolio because I'd invested in 2020 and I've got a mutual fund and I want to exit. I need some money, but I need it for 3 months. In 3 months, my salary will come and cover it up. What should I do? The AI might say, listen, you know what, you got 14 mutual funds. I'll take this mutual fund. This is the most tax efficient to exit, blah, 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 blah. What it doesn't consider is there is an outside the syllabus thing also, which is to say, don't sell anything. Put your mutual funds, take a loan against your mutual funds. If you take a loan against your mutual funds, the amount of tax you'll save by not exiting those investments is greater than the amount of interest you pay by a factor of maybe 4 or 5 on the 3-month loan that you take for doing this.
Correct.
You deferred your loan to your capital gains to another time. You have, and maybe it has to be smart enough to say, listen, you get 1.5 lakhs of tax-free gains per year. So book that much and take the remaining as loan. Now, the AI to do this has to be super contextual and special and understanding of the dynamics. But what you asked it is not that question.
Correct.
You asked it, which mutual funds should I sell in order to take 5 lakhs out of my portfolio? What the AI is not understanding from you at this point is, I could take a loan instead. So for this two to come together, AI is going to reach, take another level to reach, right? And maybe you can train it to do that once you get it. But if you're going to train it to do everything, then it's not AI per se, right? It's helping you in some way, but it's not giving you any meaningful input. So you're at some level, AI is a bit of based on inputs that you've given it, doesn't think outside the box all the time. You have to force it to think by giving it the right kind of prompts and all that stuff. And then it starts giving you clarity of thought in your own way. So it's a good thing, something to bounce off ideas with. But in the end, you got to make your own decisions. And if there are some out-of-the-box things like take a loan against your mutual funds, that is new information that you can process and pass on to your version of AI. That allows it to contextualize and say, tomorrow if he asks me this question, I have that also as an alternative, as an answer.
Got it.
So that's a interesting way to kind of analyze or look at a problem. But I keep saying this, AI isn't going to take your job away. It'll take a lot of other people's jobs in that sense. But you can use it to make your job better. So you will still be required as a functional part of whatever you do.
I mean, people will be people should constantly be upskilling because of this advent of AI.
I mean, people should have constantly upskilled anyway. The idea that you will not upskill and you will continue to have a job is utopian, and it happens in. I mean, unless let us say you're a person who's a household help washing dishes. Beyond a certain point, you will be replaced by a dishwasher if there's a dishwasher capable of doing things better in the Indian context. The problem with Indian food is oily. So you need to scrub it before you put it into the dishwasher. And it needs so much scrubbing that if it needs so much scrubbing, they might as well wash the plates themselves, right? It's a little bit of that. But tomorrow there will be these super efficient dishwashers, perhaps, that are catered towards Indian food, where you don't have to do anything, just put your stuff. It figures the whole thing out. Then, without the scrubbing, then you don't need the cleaning person to kind of wash it at all. At which point, you can truly say that you've replaced a job, right? But if it's somewhere, anywhere in the middle, and it's been what? India has reached a $3.5 to nearly $4 trillion economy. We've crossed $2,300 to $2,800 per capita. We have a lot of needs in India, and yet you don't find these pieces of equipment prevalent. And I keep saying this, sometimes what is obvious can take a lot longer to permeate through society than you initially imagine. I'll give you one big example of Bombay and where we are right now. Mumbai is hot and sticky, humid. For the most part of the year, you'll find that clothes dry a lot slower because it's humid. And because of the humidity, they don't. You need sunlight to, otherwise they will, carry a smell and all that stuff. Why aren't dryers insanely popular in this place? It's a mind-boggling thing.
I think it's a space.
Is it a space thing?
Yeah.
If you have a washing machine, you can stack a washing machine. On top of the washing machine, you can put a dryer. You could get a design of a washing machine that includes a dryer, which is of massively that standard. But assuming that space is only a small constraint, because they found a way to keep the washing machine. So it's not like the washing machine is not popular. Could we not find space to put a dryer? And maybe they will. Even when washing machines came, the initial thought was it's going to replace all the dhobis. It didn't. It took a long time, right?
Yeah.
And then now it's permeated to a point where every house has a place for a washing machine. Tomorrow there'll be a place for a dryer. You just stack them one on top of the other and you're done. But the fact that it hasn't happened till now, and we're in 2026, and perhaps the first time I saw a dryer was in 1998, and I was like, why aren't these popular in India? In the US, it was mostly because it's very cold outside, in the north at least, and then, you don't get sunlight in any meaningful format, so you're using dryers. So it's not like dryers were new to the world. It's been 30 years, 28 years since then, and yet you don't have that popularity, even though India's got rich enough to afford a lot more dryers, and Mumbai definitely so. You still don't have this. So AI might be great, fantastic, it works for a lot of people, but it can take a long time, a much longer time than you imagine, for it to permeate through society in a way that meaningfully replaces jobs.
So I find this very fascinating, that Citini report that we were talking before we started. Last week it caused mayhem in markets. You had tweeted saying that this is much ado about nothing and it's not as grave as they make it sound. Even Raghuram Rajan, he spoke to a news channel and he said that this is overblown skepticism, it's too much science fiction. So in this environment, as a retail investor, suppose I'm a retail investor, I come to you, I say, how do I diversify my portfolio? Exactly the way you said. Keeping in mind that there is overblown, I feel some of it is polemic, not exactly reality. People get scared by movements in portfolios. So you see people stopping SIPs also during these tense times. How do people think of diversification? Because focusing too much on India also might hurt their portfolios. Like you said, the multi-asset allocation fund, it helps people diversify abroad. So could you just explain to people how to think about that?
So I think at a time like this, the multi-asset allocation fund works a lot because if it existed today, we are one of the few multi-asset allocation funds that actually want to take a position beyond gold and silver. So we'll use commodity derivatives to buy into positions in crude and crude oil. And so a time like this when crude oil spikes, if you have a position, then you know that you'll benefit somehow when everything else is falling. So equities are down 2%, crude is up 8%. So even if I have a 1/4 position in, or even a half a position or 1/10 a position in crude, it's offset my position that fell because of equity by itself, right? So essentially, even a 10% allocation, a 5% allocation, a 2% allocation will help you kind of balance out the other side. The second thing is people don't think about diversification. It's a very difficult thing to think about. We are all players that like to chase the one thing. But that's why people tell you what's the best stock to buy. They don't tell me 25 stocks to buy and I'll buy all of them. They say, ek bata yaar, one. They want to bet their house. People are just, geared towards, I want to back up the truck and I want to just buy this. Everything into one. Bitcoin. हाँ, मेरे को Bitcoin लेने का. मैं अभी नहीं कोई बात करेगा because now Bitcoin has this minus 50% going on. But when it was 120,000, why didn't I sell my house and buy Bitcoin? That was the problem. And so we are naturally geared towards bet on one horse and then show off about how much you bet on that one horse. That's how we are. We are a combination of investment and entertainment. So you have to actively go against human philosophy to diversify. Which means, see, even yourself, you're betting on yourself.
Correct.
Right?
Yeah.
If somebody told you that the average person in India does not pass the IIT exam, and everybody knows this, and everybody is a rational person, does it mean nobody gives the IIT exam? I mean, the guys who know they are among the best, they obviously know. They are fighting for the first rank versus the 10th rank and, things like that. Everybody else should technically not give the exam because they know that these 5,000 people are the only ones that are going it. At best, 10,000 people should give that exam and fight for the positions and that's it, right? But no, some 500,000 people give it because they're like, nobody believes the law of averages applies to them. And it's fine because that's the way progress happens. Because if you only said that only the top people will succeed, then nobody can ever come to the top. If it is because that you have the opportunity for someone to come out of the blue and succeed, is also a reason why some of the top people fail because they cannot fight that competition and that's why they fail. But your problem comes down to you don't want that, and at the same time you want diversification. Now, why do you want diversification? Because you have opportunity for multiple things to happen at the same time. You know that it's possible that the best equity products, stocks, whichever you may, great banks that continuously earn money, they all can have long periods of failure. So the top banks in India have done amazingly. The topmost bank is probably up tremendously since its IPO, right? 30 years or something like that. But if you looked at that same bank in the last 2 or 3 years, it would be like very ordinary returns, maybe even 5 years. Now you're thinking, why does the top bank in India, it's still growing, it's growing at 10, 12% or 15% or whatever. The answer is, well, you know what, maybe it overshot its runway during the first 25 years. And after the subsequent 5 years, we're just making up for the fact that you overshot that runway.
Yeah.
And that growth rates have actually normalized to much smaller levels. That the 30% year-on-year guaranteed growth is no longer available, is why you're re-rating that stock downwards. And that's how it's come, right? So even buying the best stocks has not given you the solace that you will get the market. So and then you get things like some Iran has been attacked and somebody else or something has happened, and the stock, which is an Indian bank in India, which has almost no relationship with other than some NRI sending it some money, which are possibly delayed by a couple of months, not gone entirely. Even then, that bank is down, say, 10%. Now, how do you escape that volatility? You're not fearful that this bank will collapse and go bust. You know that it will survive, you know that it will do well, and possibly in the long term, if you continue to hold it, you're still okay. So, your volatility is not equal to risk.
Correct.
The risk is of holding this long term is okay. But the problem is the volatility in the short term makes you feel that, oh, I shouldn't have this stock in my portfolio. Or maybe, what if I had different. So, to avoid that, you say, well, you know what, you got an equity portfolio. Do whatever you want in equity, large, mid, small. Have a multi-asset on the other side, diversification. So people don't think diversification, but they want diversification when things go wrong.
Yeah.
So you need to go through that cycle once and kind of live it, and then say, okay, well, I don't think I have the ability to chase the highest return if it means that I'm also getting the highest risk on the downside in terms of volatility. So I will therefore switch to a portfolio that doesn't do as well on the upside, but therefore also doesn't do as well on the downside, as badly on the downside. Okay. So this diversification is a lesson learnt, not a lesson that is intuitive to us. Intuitively, we are non-diversified. If you asked, because we like it, we choose. I mean, if you told me who's going to be the winner of the IPL, there's only one team that can be the winner of the IPL. Right? But what if I told you that I want the best 5? It is automatically easier to choose, but doesn't feel as good. Yeah. What's the point in choosing 5 teams out of like 10? You know, so I'm like, no, but it matters.
The probability changes automatically.
The probability, I mean, my probability of success increases from 1 out of 10 to 1 out of 2 in that sense. But it's even more than 1 out of 2 because you have a history to back it and all that stuff. I think that probability game is not intuitive. It is basically, we have to fight ourselves. So to a person who's coming in and saying, listen, we're scared, everything will fall apart, I have 2 answers. First of all, you don't know that anything is going to fall apart. These guys, IT companies, have survived a lot more of this stuff, and we'll talk about that. But the problem is, you're making that assumption based on some random Citrini article. The random Citrini article decided that all of these guys would lose jobs without accounting for the fact that large companies do not make such decisions like this. They do not make such decisions as, oh, we have a CRM package. I could talk to Claude and build my own CRM package. Let me do that. No big organization that has, more than a few brain cells will think of this as an apt thing to do. If it is really big, they might build some in-house capability. But to do something from scratch, which is an external vendor-led activity, basically it is not core. That's why you've externalized it, right? So if it's external vendor-led activity and you're using AI to do this, you're not going to replace that vendor because you want somebody to blame in case something gets wrong. You're going to tell that vendor, you use the AI. You make it better for me. So the vendor will fire a few of his employees, or not even fire. They might repurpose their employees to say, listen, I'll do this for you. But guess what? You know what? I'm doing this one thing, but you have these 7 other things. Why don't I use the same team and get you these 7 things done rather than just that one thing? Because now I have a team, they're smart. Instead of using just 2 of them to do this one thing for you, I'll do the 7 other things. You want a CRM, that's one thing. But you want a relationship management piece inside of the CRM. You want a set of MIS reports for management that are that you're currently using with a bunch of people. I can use the same AI to use the same data to get this out for you at 1/10 the time. Earlier, if I had come to you and told you that this is a project, you would have said, how much does it cost? I would have done my calculations and said, okay, 40 people into 400 man hours into so much, and say, oh, approximately this much, but we'll charge you on actuals. You'd say, no, it's too much. Now I can tell you that it's going to cost me 2 people, 20 man hours, plus my AI cost, plus my margins. This is the cost. And the cost of A plus B is probably less than what you were paying for A earlier. Right? And I can completely continue to employ my people while they do more work and are more productive, and the customer is willing to pay me my margin plus my AI tools margin at the same time, because it's still cheaper for them to do that.
Rather than do it themselves.
I mean, come on, do it themselves means you have to blame. You have nobody to blame.
Yeah.
I mean, here you have an external vendor. You can say that, do this. Well, this is, you have an internal team. You have no way to motivate them. They're doing something adjunct to to your activity.
Correct.
So, like running a tool which is supposedly enabling their stuff, but there is no incentive because it's not a core function. A payroll management software. Which company has a payroll management software of its own? At some point, you're going to use some external software.
Something you mentioned about the IT sector, which kind of, I mean, it's just a stray thought. I thought I would put that to you. So India's IT sector gets like say $300 billion in exports, around 310.
240 or 50.
Yeah. So that's the NASSCOM number for this year. So do you think that because it also helps bridge the trade deficit, the balance of payment to an extent, do you think that are we staring at some kind of risk there, or that as it is overblown here, that is also not as
I mean,
much?
if you're not going to see lower revenues on the... by the way, in January 2026, Claude is on, people are using it, India is one of the big users, blah, 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 blah. We had one of the highest increases in software service net exports.
Okay.
Exports were up, imports were down of services, despite so many Indians paying for Claude, right? What we have probably done is use the same tools to export a lot more than we have earlier. Because in the end, even the American or the European guy is looking and saying, I know this is great, but I need someone to help me make sense of it or make a better tool out of this thing. I don't have the ability to run an AI agent which will go and do my thing. I need someone to help me even create that AI agent infrastructure to do that thing. Who's going to do this? Well, find Indian company, give them work, they'll do it at 1/4 the cost of whatever else is there. And because India is so much into AI, into the nitty-gritties of everything, that the number of Indians you can find who are able to make meaningful use of AI, maybe 100, not 100,000. Okay, 100 is a little less. Maybe 1,000, not 100,000. But equivalently, you'll find only maybe 50 of those in the West who have the same capability. Not because of anything else, but just because we are such a big country. We have so many people that for us, that 1,000 people is such a small percentage of our population. For them, 50 people may be an even greater percentage of their population, because they'll say, oh no, more of us as a percentage know how to use AI. Fine, but your total base is much smaller. Like you have 100 million people, we have 1.6 billion people. It's like a factor error over here. So you'll just find a person eventually more easily in India or in China. China, there's just a language barrier, but China has way more people who are smarter at this than us. Like again, a factor of 10. It's just that they just don't know English enough, and they have enough of a local market that they don't really need to serve the foreign markets just yet. But I feel that the fact that AI exists is going to create jobs. And it's already creating jobs. And I'm saying this with January data itself. I may be wrong. I may be horribly wrong. But I feel that I'm not going to be. In the sense that when the PCO went out, STD booths, if you may, they were there in 20 years ago. There were things where people had to go pay 5 rupees or 10 rupees or whatever it is and make phone calls. Today, you cannot pay someone 10 rupees to make a phone call. You can literally ask someone, can I use your phone? And they'll give it to you for free, because they're not paying for the phone call. They're paying a monthly fee regardless of how much they use it. So they have no problem giving you their phone to make whatever phone call you want. But there was a time in which you had to go and stand in line and wait for some time to change before you make phone calls. What happened to all those people running those STD booths? In Bangalore, a special license was given only to disabled people to run such places. Now, what happened to those disabled people? Nobody talks about it. It was a problem, I'm sure, for 1 or 2 months. But eventually they found jobs. these people will also find jobs. In fact, they'll find more. There will be more jobs created as a result of this, not less.
Got it.
So one is that. Okay. Second one is, let us say part of this fear also comes about. This thing. When you don't have so many people consuming, you're not going to want to import as much. Our imports will collapse. I mean, if your problem is you want a 7,000 rupees sneaker, the guy who doesn't have a job is not buying a 7,000 rupees sneaker. So you're importing less sneakers. Because the 7,000 rupees sneakers are coming from abroad. Indian sneakers are 400 rupees. So he'll buy the 400 rupees sneaker. He will not buy the 7,000 rupees sneaker. So the Indian businessman will probably get more relative business than this, than the loss that you're seeing from a set of people who have lost jobs. So does it not have downstream impact? It's not like we'll only lose the exports, but not have, we'll continue to have the same level of imports. What do we import for the most part? Crude. Crude is mostly used in what? Cars and this thing for India, and maybe some plants and all that stuff. The plants that use natural gas or other things will probably get redeployed to doing other things. But people will not use as much electricity. If you're saying that this actually is happening, that we lose all these jobs, all our IT companies shut down, then what? I don't think that you should assume that India's trade deficit will remain that big. First of all, it's $700 billion. If you removed a lot of these demand-led imports, you would not have, for instance, our third largest import is technology, telephones, mobile phones and all that. People will not buy phones if they are faced with job losses. They're not going to buy those new iPhones and those new things and all this. Though India continues to make iPhones and export it. So one of the biggest trade exports has now become electronics as well.
Correct.
So we may continue to export the electronics, but not import them for domestic usage. Which means that automatically some part of the trade deficit gets collapsed. So I don't think it's as big as a problem. I don't think it's a problem at all.
Okay.
I think that this idea that the job losses will be so intense that everybody will lose jobs. Look, I should be afraid. My job is the greatest at risk as a mutual fund manager, saying you don't need a mutual fund manager. Anybody can, an AI can set up a mutual fund. I'm sure it can, but when there is a crisis, try telling SEBI to find the AI. Right? There's a problem of any sort. SEBI is not going to look at the AI and say, boss, why did you do this? It will say, oops. And that's what AI people say. I mean, after they delete root directories and all that stuff. So, as in, if you're going to need human beings at a time of a crisis, then you're going to need human beings at a time of a crisis in every industry.
Fair enough.
Which means that the human beings are using it as a tool to enable themselves to be better service providers than they are as replacements entirely of human beings. It's true that technology forever has reduced the need to use human beings to do certain things. For instance, the fact that I code and write a letter that can go to hundreds of people on email, which earlier would have required me to print out that letter or write it by hand, cyclostyle it or something like that, or even that is technology. But at some level, put it into envelopes, paste them, use the post office, somebody humanly delivers the letters. I have replaced all these jobs. The people who used to fold these letters, the people who used to manufacture the envelopes in which these letters used to go, no longer are needed. I have replaced jobs with technology all my life. So the fact that one more level of replacement happens through AI is not surprising. But none of these job replacements have resulted in less job opportunities.
Fair enough. Yeah.
Because it means that more people were using email, that means more businesses will come. Where you see one business doing one thing, tomorrow you will find 15 businesses doing the same thing. It was impossible earlier to get the distribution in India to run a credit card business. So one bank had almost a monopoly on credit cards in India. This is about 15 to 17 years ago. Today, you can't walk into any place without being offered a credit card. And the airport, just before you step into the airplane, one guy is like, sir, one credit card, please. So literally the distribution moat has gone. Everybody else has figured it out, but you don't even need to be there. You can be online. One floor will flash one ad. You click a button, it will say Aadhaar OTP, and boom, you have got approved for a credit card. And that credit card lands up in your house 2 days later, and you're done. You don't even need to go visit the bank, meet a human being, nothing, and you're done. So what has happened here? The hundreds of people that were running the distribution to sell credit cards have been appended by this technology that's come in and said, I can apply for the credit card anytime I want. I don't need humans to fill my forms, and gone. But are those people not finding jobs? I'm telling you, they're finding jobs. They're finding sales jobs at different levels. Some of them are probably using the technology to build the software that sells these credit cards online. So, in the sense that if I were to build a company that says I'll sell credit cards online, I still need one salesperson to go to all the credit card companies, collect all the information and say, I will back end that information here and we'll put it up. It's not like it's coming automatically.
Correct.
The salesperson that, so sales itself has changed because of this. So, more salespeople have got jobs, not less. So, I think A, our fears are overblown, and B, even if these fears come true, the impact is overblown.
Fair enough. I want to reset just to a little bit of macroeconomy and global geopolitics. So we are seeing, I mean, at least in India, the inflation has calmed down a bit, but there's a lot of fear of imported inflation because of the crude price rising, possibility of that, and the fact that India doesn't have that many chips. So there is a global strangle going around basically to just ensure that you have secure supply of chips for your whatever your economic growth demands in terms of whichever sector. So this interest rate cycle has also switched post that easy money era. So portfolio allocation, say 3-4 years ago, people were saying that you have to think differently from before, like every sector will not go up. Now, considering AI has impacted, okay, fine, we'll put AI to the side. The geopolitics today are so confusing for a person who's, say, 22, 23, or say 25, because they have not lived in an era where every decade would have like at least multiple wars. This decade has had, there are at least 3 ongoing wars right now. So that impacts everything around us, and that impacts investing also. Like, so how does a say a young 25-year-old think about defensive positioning in such a scenario? Because it is very there's a growth risk embedded in such situations. What do you think?
Okay, the new fears you're talking about are the same as the old fears.
Correct.
When I was 25, I saw wars. I thought it was unique. And I thought, oh my God, the world hasn't seen what I have seen. But the world had seen it. I saw enough of it afterwards. I saw the original, when the first Iraq war happened in 1991 or something, or 1990, I don't know. That time I remember hearing about it. And then there was a whole bunch of things. And then there was the India-Pakistan war in 1998, where Kargil was the issue. There was a hijacking in 2001, of course, was the big, 9/11 problem, and then the Indian Kandahar crisis. And then there was in 2000, I think there was at that time both Afghanistan and Iraq, one after the other during that time. There were subsequently lots of wars in the Middle East. I think in the 2010s you saw the ISIS thing happen and unhappen, and then you saw Ukraine and Russia's first war, 2014. You saw Brexit in 2016 or 15 or whatever it was. Every few years, there is always some geopolitical crisis. It seems like the biggest crisis of our time, but it's not. Brexit seemed like insane at that time, but it was not. Recently there have been just a spate of very interesting geopolitical events, one after the other. The Ukraine war in the first place, then there was the first Iran crisis, and the second Iran crisis, and then the Venezuela thing and something else, and India-Pakistan. So you would not imagine that the markets don't even change their mind if something small happens, right? What I can tell the younger people is this: we've all seen it before. It's okay. The world has come out okay in the end. The world will forever come out okay. If you don't believe this, you should invest in fixed deposits. If you don't believe that the world will finally come out okay, you should invest in fixed deposits. If you do believe that the world will come out okay, it doesn't matter what the world is doing now if you have an SIP plan in place.
Got it.
You're earning on a monthly basis. Today, your earnings are small relative to your savings are small relative to your earnings. You're probably saving maybe 1/5 or 1/10 of your income, sometimes 20%. But even if you save 20% of your income, in roughly a year, you've saved 2 times your income. 2 times your monthly income.
Got it.
2 times your monthly income is 1/6 of your yearly income.
Got it. Yeah.
Right? I say this, until you reach a point where you have 3 years of income in your savings, the amount that you will save by thinking about should I SIP now, should I SIP then, should I do this, should I do that, is irrelevant.
Got it. Yeah,
It's at 3 years of income that you suddenly start feeling that the amount is large. Because at 3 years of income, if the market falls 20%, you're losing roughly, I would say 7 months of income. Right? So it suddenly feels like 20% fall is a big deal. I should protect against it or whatever, right? If you're in the second year, you've probably saved 4 months of income. You're almost like if the market falls 20%, 1 more month of income and I'm fine. I mean, how bad is that, right?
Fair
It's just going to feel bad talking to your friends at parties, but it doesn't hurt you. So at some level, until you reach that point, you're making silly decisions for irrelevant amounts. And only beyond a certain point does it matter. When you reach that certain point, anyway, diversify. I would say don't keep everything in equity. You do your SIPs in your flexi cap funds and your equity funds and large cap and small cap and sectoral, whatever you're doing. But have a strategy to diversify. So your multi-asset allocation will be a nice place to diversify away from pure equity. So you have that diversification in place. Have a 1 year or 6 months to 8 month emergency fund in place. So in case you lose your job, you have about 6 to 8 months to find another job. During that time, you can this thing. Have your health insurance and life insurance in place if you need it. All of these elements are important for you to build your hygiene. I don't think there are meaningful ways for me to say don't get distracted. You will get distracted forever. Just don't make decisions on distractions.
Fair enough.
Most of this news is entertainment and designed to outrage, designed to make you want to believe that you should take action. But it is the equivalent of saying, I saw the Saas Bahu serial, and that is what is going to shape my relationship with my mother-in-law. Like there's a reality and there is a arbitrary characterization for generating views. You do not equate the same in your real life. Why would you do that for your financial life?
I like this, the way it was constructed. Someone said this, like a lot of these Claude, Anthropic and these other posts, it's basically a press release, right? So if there's a press release, how much importance would you give a press release of any other company?
I mean, if I'm a press release, I am going to release something that says we are going to, be the only mutual fund company standing in this country. Nobody else is going to be standing.
Yeah.
And guess what? Because we're a mutual fund company, no bank will be able to ever give fixed deposits again. And because we're a good mutual fund company, nobody will need insurance. So no insurance company will succeed. And it's only our mutual fund. And I'm sorry, but the progress has come to a point where I cannot, in my heart of hearts, I feel bad for all these people in the mutual fund industry who are going to lose jobs. But guess what? It's reality. Of course, I'll say that. I mean, this is my job, and if I'm going to go IPO, that's what I'll say. But I mean, come on, at some point, you have to be like, boss, you are talking your own book, and if it was as bad as you said it was, we would have seen a lot more job losses than we've seen right now. What we've seen right now is people suddenly getting up and saying, shit, we have too many people. Can we blame this on AI and fire them? And, And because you build fat, no, over time. So you go and I mean, look at me. I could be fitter, but I'm not. I've just built fat. At some point, I want to get rid of this fat, and then there's no harm in getting rid of fat, and you know that. And then what do? I mean, for a company where there are people with actual jobs, my fat goes. I don't have to explain to my fat that it has to go, but you have to explain to people when you leave whether they're leaving, and then you don't want to say that sorry, but you weren't doing any work, because the guy's going to be like, no way, I was doing so much work and all that. So you're like, yeah, but it was not useful to the company. No, it's not you, it's AI. It's much easier to blame the AI, right?
Yeah.
And how much of these job losses are actual job losses because of AI, and how much are they because people just wanted to get rid of flab? I believe it's much more of the former. It's like,
They're using this as an excuse, probably.
it's not, I mean, it's just an easier way to walk around a problem that would otherwise create labor law issues, and people will never join your organization again if you just fire them for things like this, and all sorts of things. Whereas AI can be much more easily explained. I think almost all companies have flab, and whether it is the Indian IT industry or whether it is the American CRM industry or whatever. You saw one of the AI. So, when Elon Musk took over Twitter, he fired God knows how much, 80% of their people, and that site still ran. Even a company like Twitter, which doesn't need that many engineers in the first place, has fired away 80% of its people, and it's fine. So you expect a 250,000 person organization to be working at absolute top level efficiency? Unlikely. It's very possible that a lot of them are just flab, and that flab will have to go. And I think it's perfectly fine to use it. So are these job losses because of AI? Possibly not. So I mean, don't think we should fear that the job loss will come, and it's all because of AI. I think AI will change this. Yeah.
Got it. Last couple of questions. So this we keep referring to growth and value investing. So traditionally, we know what the meaning of growth and value investing is. You either find deep value somewhere, you go and find investing. You expect a particular sector to continue to grow because the economy of that country is such that it will sustain. Considering the fear that a lot of people are fanning in that AI is going to disrupt XYZ, ये sector हो जाएगा, वो sector का हो जाएगा, analytics निकल जाएगा. So do you think that definition of what is today's growth sector, does that get impacted by AI, or is it just a natural progression of the
No, I think it does get affected because some sectors are naturally more amenable to AI than others.
Okay.
For instance, I don't see AI massively changing carpentry.
Okay.
I want some wood stuff fixed in my house. It may not. So the guys who are building the business around carpentry may not be as badly impacted. However, there may be a more AI-based understanding of this industry to how to build modular furniture. And you can have more companies doing modular furniture simply because AI has given them the knowledge of how to build modular furniture without them having to take like a course or 7 different courses, right? So I think AI affects different industries very differently in the sense that in some cases there may not be an easy way for AI to change things. The other one they can. For instance, if you take carpentry as a profession, I think people like carpenters, plumbers, they're not going to be as badly impacted with AI simply because AI is not yet currently fixing or meaningfully fixing things on your plumbing, and it costs a lot of money. There was this recent guy, very smart guy in Bangalore. I think he said, I put up this AI tool to check if my cook was stealing stuff, and I found out that I pay 5,200 rupees a month and or whatever, 4,800 rupees a month, and there was some point where he was stealing some grapefruit, or 2 instances of him eating grapefruit. There was a point which said, okay, there is a point at which he didn't wash his hands before he cooked your meal. So hygiene element is there. But I'm like, okay, take the hygiene element out of it. You're spending 5,200 rupees a month on an AI that tells you he's stealing 200 rupees a month from you. This is dumb. I don't care what it is, but I'm unlikely this person is going to ever steal 5,000 rupees worth of stuff from you without you knowing. And if he's not, then spending 5,000 rupees a month on that person's hair is just stupid, right? Yeah, you can convince me of the hygiene part, but the hygiene part is a either or. So they continue to do it, they're fired. They don't continue to do it, you at some point will find this useless to, I mean, if they don't do it for like 15 days, after that you'll shut down the AI. Right? It's like, okay, it'll help you kind of vet a person over a period of time, but beyond a point of time, it's useless. So this plumbing and carpentry and all that stuff, it's difficult for AI to take over and do these things directly. But the person who is the carpenter can use the AI to benefit their own jobs. So it's not like I will hire less carpenters. It's just that I can get my carpenters to do their own job better by giving them various inputs on, say, how to build modular furniture and things like that as AI itself, right? But I think there are some jobs that are very easily amenable to AI changes, So, for instance, you could imagine, I'm not saying that you will, you could imagine that you had a person who was, say, a dietitian. It is possible that at a certain scale, a dietitian cannot operate with more than, say, 20 people or 30 people at a time. It's just a natural problem, right? So there are two problems now, which is that people who are generally healthy and who were using a dietitian who does not have the time for them, because they have so many people that they're working with that they find it difficult to kind of give time to everybody. They might be able to say, listen, I don't want to use you anymore. I can use AI to sound off because I'm fairly well informed about these subjects. I just need a sounding board and I'll be fine. I'll give them my inputs. So at one level, I can, do this and this way. The dietitian themselves can build themselves into a point at which they distill their own knowledge into the AI so that when people start talking to them, they may be able to give first level responses of enough that are able to satisfy most of their customers' needs. For the ones that go beyond, you can always have the human intervention of someone coming in, right? So now that same dietitian can serve 400 people instead of 30. So 30 means one person once a day per month. 400 means a lot more, so therefore you can get, so you can get jobs which can be both disrupted and this thing by AI naturally, because I think AI is built to do a lot more of this content and, unstructured data kind of job. Growth and value wise, I would say that certain industries you'll have to figure out whether your industry is a part of this which will get impacted, and B, whether your company is the kind of person who's like that dietitian who wants 400 customers or not. Do they have the hunger to grow? Do they have the ability to change their business model to grow in that? In which case, you don't have to change your companies.
Got it.
It's just that their business models will change. On the other hand, so will growth change? Of course it will change, because by nature all of this is there. But on the other hand, if your company itself is evolving, then it's fine. If your company is a carpentry company that is doing a bunch of things around that. Yeah, I mean, in most cases, I would say AI will benefit the industry. Right. It will be able to make people provide better value to their customers, and their customers very rarely are ones who have enough thought process to think and say that we over-index on people who talk too much on Twitter.
That's a fair point.
Okay, so people who talk, it's like, at some point we were over-indexing on the Facebook couples who were going everywhere and taking photographs and thinking that if we are not going everywhere and taking photos, are we even a couple?
Fun, yeah.
So, that's the problem was that became an existential crisis at some point. Now that's all bullshit. So you don't give too much ahmiyat or whatever it is to those kind of things. I would say over-indexing on people on Twitter who have managed to make Claude do some impossibly difficult, weird task that you would never even think of doing yourself, but you're impressed by the fact that somebody else has made Claude do this for them. Is like over-indexing on, so then it's not normal. This is not what normal human beings do. It's not sit with Claude and give it 16 Claude.md files bifurcated by type of, I don't know, which font and which what and all that stuff. It sounds like too much work for even me, and I'm reasonably computer savvy. But beyond a point, if you tell the normal person, dude, you do all this, can I find a company that does this? I'm buying paints. Can my paint company do this for me and just give me the right paint? Well, yeah. Then is the paint company a problem at all? Because will its growth get stunted because of AI? It could if they refuse to see the AI, and somebody else like Kodak refused to see that the film print market was dead or dying, and that digital was taking over. Digital photography was taking over. They kept saying, no, you can't get as good as print. You can't get as good as print. It's still true to some extent that possibly analog you cannot get as well as in
Picture quality,
picture
basically.
quality wise. But it is also true that digital is good enough. And that good enough is all that is needed for people to kind of switch to a different platform. Now, if you're the leader in film and you never walked into anything on the digital photography end, it's your mistake, not the fact that you got uprooted by technology. So if people don't see how AI can help their own business tomorrow, it's their problem. I think it's the world is your oyster, and eventually, if you don't disrupt your own business, somebody else will come and disrupt it. You might as well do it yourself. We'll all have to do it. We do it in mutual funds all the time. We can't even pretend because if things are changing, we have to adjust to it right then and there, right? So I think beyond a certain point, it is no longer about growth and value are characteristics of how observant a company is of its environment around it. They are the results downstream of it. We look at the data and say, oh, this is a growing company. But the characteristic that drives this growth or value in that sense is if a company, value of course is not dependent on you, it's dependent on the market. The market hasn't seen you yet. Is it possible that AI discovers all the value companies and makes them not value because everybody discovered it? I doubt it. Because I mean, when was the last time you asked a computer or asked? So a computer can come and tell you that this company is value. Will you buy it? That's a good question. Because we've seen value traps. Companies that were value have remained value forever and the price has fallen.
Like a certain telecom operator that people keep buying and trading.
Yeah. I mean, no, I don't think that's value. But I mean, that is just...
It's just hope and prayer.
Yeah. It is not price to earnings. It is price to losses.
Exactly.
More like... But either ways, your problem in that scene is that is just a meme stock.
Yeah.
It's just people trading for the heck of trading. But the other is value, like 3 times earnings. And you're like looking, why can't we buy this? It's a great stock at 3 times earnings. And then it comes to 2 times earnings. That means you lost more money after that. So then, they're value traps. They just remain at those values and they don't change much. Because of that, you are not asking the question from the AI saying, give me the best value stocks. Then you're mentally eliminating these stocks saying, iska kuch nahi hone wala. That one, number 9 on the list sounds interesting, I'll buy it. Whereas it could be the number 1 to 8 that give you outsized returns tomorrow. And then you'll be like, shit man, for 10 years those stocks gave no returns. The next 1 year they give fantastic returns. How am I supposed to guess that the 10th year, the 9th year they'll
That's
do
the whole
anything?
value investing strategy.
Yeah, but the problem with value investing is you have a value investing time frame of 25 years. In the 26th year, the gain will come because in 25 years you're done with it. You're exited. You said enough value. 25 years I waited. It's over. In the 26th year, the stock will go 4 times. Then what? So the issue is that, right? So at some level, this growth and value investing, I don't think change that much because of AI, especially if your companies are responsive. But yeah, I mean, see, it's all nice to say AI will change everything, but this is not AI-led. This is change-led. Any change can destroy any company anywhere in the world. And change is constant. So if a company cannot adapt to change, they are not a great company in the first place. And, at some point, even great companies die because of this reason.
Exactly. Yeah. Last question. It's more about your recommendations. Say any books, podcasts, or shows, or movies that shaped your thinking that you think that our viewers, listeners should watch.
I mean, so many. I can't even begin to name them. I think
the top one thing I think people should actually consume.
So, in terms of podcasts, there is an Amit Verma and Ajay Shah series.
Yeah.
I think that I forget.
Everything
the
is
name of it.
Everything.
Everything is everything.
Yeah.
That's a nice series of podcasts. In the US, there is something called Odd Lots,
Okay.
which is a Bloomberg podcast, and there's another Bloomberg podcast called The Money Stuff by
Yeah.
Matt Levine. Very nice. Not very. I mean, Matt Levine goes into some serious depths of certain things. The Odd Lots also goes down, a bunch of very interesting topics. They're esoteric but fun because they're, I'm a nerd on that sense. I like, finance geekiness and all that stuff. So I like that a lot. I believe there's a fantastic podcast called Acquired, which
Okay.
will go down into the history of companies. And they've done a history of IPL as well, which is
Okay.
fantastic. Amazing. More than the research, the way they do the chronology समझिए वाला, that's it's the chronology of how things came about in different ways. I think that is important, or it's elucidated in a very nice way. We also have a podcast called Capitalmind podcast. I like doing it. I don't like listening to myself, so I have no idea what I sound like. So maybe it's interesting, maybe it's not.
I've listened to it. It's very interesting.
Thank you. I find it difficult to listen to my own voice, so I don't. But on the other hand, the movies, there's a movie called Trading Places, which goes to prove that one point I was talking about, that anyone can do anything. So they pick up a person on the street and make him a trader, and he learns to trade and he trades well, which means the great traders can come from anywhere. There's a movie called Ratatouille. I watch a lot of animation movies, mostly because of the kids, and one of the movies I liked was Ratatouille, and because in that book the rat becomes the chef.
Yeah.
And the statement is that it isn't that you need to be a human to be a great chef or anything like that. Right? It is that there's a statement that one of the old chefs makes, which is that anyone can cook. It doesn't mean that everyone should. It means that great cooks can come from anywhere. So great people, great things can happen from people who don't have any knowledge, not knowledge, but don't have any degrees or certifications in a subject, but they innately are passionate enough about it, which is why you don't find that there is a degree for rock bands, because rock bands technically come from the love and the passion of the music. Nobody passes a degree and says, oh, now we will go build a great rock band, and they come out successful. We have assumed that every businessman has an MBA, but many businessmen don't. And the MBA is not the problem. It is the fact that if the people have the passion to build a business, they'll build it. And so this thing is, I think, innate to understanding risk, because your risk is not of a lot of the externalities. It is the risk of, if you're not able to adapt to the externalities, somebody with no background and none of your baggage will come and beat the daylights out of you. This is an important lesson for any investor to learn, I think. So you should watch these,
Great.
films and things.
Thank you so much, Deepak, for doing this with us. तो ये था बाजार एंड बियॉन्ड का आज का एपिसोड। दीपक शेनॉय के साथ बात करने के बाद एक चीज़ क्लियरली समझ आती है, इन्वेस्टिंग सिर्फ एलोकेशन का गेम नहीं है, माइंडसेट का भी गेम है। मैक्रो इकोनॉमिक शिफ्ट्स, एआई डिसरप्शन और ग्लोबल वॉलेटिलिटी के बीच डिसिप्लिन, क्लैरिटी और स्ट्रक्चर्ड थिंकिंग ही लॉन्ग टर्म वेल्थ क्रिएशन का फाउंडेशन है। अगर आपको ये एपिसोड पसंद आया हो तो हमारे यूट्यूब चैनल को ज़रूर सब्सक्राइब करें। आप बाजार एंड बियॉन्ड का ऑडियो वर्जन मेजर पॉडकास्ट प्लेटफॉर्म्स पर भी सुन सकते हैं। तो मिलते हैं अगले एपिसोड में, तब तक के लिए स्टे सेफ एंड इन्वेस्ट वाइजली।
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.